Good afternoon, guys. It's Nick at Optima PS. I hope you're all well. Thanks very much for coming back to my channel. It really is very much appreciated. And to all those who've already liked and subscribed, I really am grateful. Thank you very much for your help with that. So I wasn't going to do a video today. I woke up, I saw the news, and I thought I'd best pop on. Again, this is something I like to do for my own benefit as well. I find it quite therapeutic to sit here and just get all my thoughts out. I normally don't know what I'm going to say, so I'm as surprised as you guys are sometimes with what comes out. But it's obviously been a strange day. Yeah, for me it was overnight. I woke up this morning to see the news about Israel and Iran, to see the news about the markets. Obviously, things have come tumbling down. There's a lot of doom and gloom out there. There's a lot of people running for the hills. There's a lot of people scared, and really, it's just a case of coming back and saying, look, you don't actually need to be. And I'm not talking about the war situation here. I mean, obviously, war is a terrible thing. I'm someone that is never going to advocate war, no matter which side it is or who's involved, who's to blame. Innocent people are going to end up in serious trouble, if not dying. This is always a bad thing. I'm not here to comment on the moral aspects of that war. That's something I'll leave to people more experts in the field. But I wanted to talk about the effect that wars have on markets. And more importantly, the title of this video is to stay emotionless. And I want to talk about that in a little bit more detail because I'm seeing an awful lot of emotion out there today, and that's not really the way we want to go. So before I get into that, just to say, as ever, I am a financial advisor, but I'm absolutely not your financial advisor, and there is no way you should consider everything I say or do in this video as to be financial advice. If I were ever to give financial advice and I need to do a whole bunch of forms, there's a professional contract in place. And trust me, you would be aware of it if I were giving you financial advice. So until that point in time, I'm just a guy sharing my opinion on the internet. And hopefully I can bring a little bit of value to you guys with some thoughts and knowledge from having been around the block a few times and seen this kind of thing more than once or twice in my life. So again, let's take a look at this, right? So we've got all this doom and gloom out there in the market. Oh my goodness, everything's down, everything's tumbled. The charts don't quite show it now because things have already improved. I mean, this is today. Bitcoin's still ever so slightly down at 64,000, but we only have to look at earlier in the month and it was there at 72. But this is where remaining emotionless is really, really important because you take a step out to the years charts, and this is what everyone is so fearful of. And you know, have a look. There really is no reason to be fearful. I saw somebody post today on social media platform X saying, "Oh my God, Bitcoin hit $61,000," and I thought, well, that's the same $61,000 that we were all celebrating having hit what, 6 weeks ago at the start of March. We're only mid-April. Realistically speaking, this is a very, very interesting position to be in. When did we hit 61? So we're up here at the beginning, and yeah, so basically the start of March, right? 29th of February, 61,000. And people panicked that we hit 61,000. We hadn't been as high as 61,000 for a number of years, going back to when were we? Yeah, November 21. And now that's the panic point. So sometimes a little bit of perspective just helps. We can do the same. We can look at all the other coins. I mean, XRP, there you are. It's now up for the day. It's 0.59 up. Okay, it's up from a low point, but it's still up for the day. At 48 cents, I'm now back into positive territory. There was a very, very short point this morning where I wasn't, somewhere down here. Yeah, my average is about 44 cents, I think. It might be a little bit higher than that now. I bought some more this morning, which has brought it down again. I bought some a couple of weeks back, which probably moved my average up to about 48 cents. So I'm in this strange spot where, I mean, I am absolutely emotionless, and there's a couple of things I say about emotions in investments. I mean, there's a few phrases. I like this one from Bill Ackman. I'm not emotional about investments. Investing is something where you have to be purely rational and not let emotion affect your decision making, just the facts. Perfect way to look at this. I mean, absolutely perfect way to look at any form of investing. The same as when you play poker or you play blackjack in the casino. It's all about the numbers. It's about the numbers on the cards, and nothing else should affect the way you make your decisions. Okay, with poker, you can try and read the emotions of the other guy, but in an ideal scenario, everyone around that table should be emotionless, and it comes down to the mathematics, the facts, the numbers on the cards that you hold, and you should base your decisions purely around the mathematical calculation. What is the most likely outcome from the position I'm in? And it's the same with investing. And I tend to find the people that get emotional about investment, not emotionless, are those that are either incredibly inexperienced or those who are over invested. People that have put more money in than they can afford. I saw a guy this morning saying, I put the last $20 of my bank account into the markets this morning. Now, again, you could argue that that guy is emotionless, because who would put their last $20 in to buy more because they know it's a good deal? But in the same respect, most people who are emotional about their investments, it's because you're overcommitted, you're overexposed, you're overextended, you've put too much of your free cash into the markets. I sat there this morning. I did make another investment this morning. I've not done the maths on it, to be honest. I just threw what I was comfortable throwing in. But I think it was something like, oh, I don't know, less than 5% of my bank account. And I don't keep a lot of money in the bank account normally. I don't keep a great deal in cash. I'm an investment guy. Most of my money is invested somewhere. I do therefore receive dividends, renewals, annual, monthly, quarterly payments into my bank, which means I can be a little bit more free with how I invest it, how I spend it. But in the same respect, it was a tiny portion of my cash in the bank, never mind a tiny portion of my overall portfolio. And because it's such a small portion of my overall portfolio, my overall position in life, I can remain absolutely emotionless about that investment. There is nothing that makes me fear, oh my God, what if the world doesn't pick up for the next 12 months? Hey, if the world doesn't pick up for the next 12 months, that's fine. I'll just buy a bit more every month. I'll buy whenever I can. It's the way that you work. But you struggle to remain emotionless when you're overextended on your investments. So I tend to find that's kind of what drives things. Again, we can look at this today. This is XRP. It's actually positive today. For the month, it's not. For the month, that looks dreadful. But then you zoom out. You zoom out. That's a continuously extending incremental rise on the price of XRP. It's something that means I am not fearful in any way or form. Over a year, it's 7% down. I'm not 7% down because I didn't buy at this point and wait. I bought it strategically at various points along the chain. I'm still in positive territory. Um, but remaining an emotionalist is a very important thing. I mean, let's take a look at the actual cryptocurrency prices right now. So we've got some coins that are in profit in the last 7 days at least, if not the last 24 hours, a couple. I don't know these ones. These are ranked by their 7 day performance. And there's a lot of people screaming and shouting, "Oh, why has XRP done so much worse than all the other coins?" And here it is. It's 19% down in 7 days, 12 in 24 hours, 1.75 in the upper, or 2.48 now. It's just changed in the last 1 hour. But realistically speaking, it's not in the worst performance. Not nearly. All these people that think they know what they're talking about, that see the doom and gloom and share it. Oh my God, run for the hills. It's the worst performing one. It goes down more than everything else and never goes up as well as everything else. But here we are. I can go on for 97 pages worth of coins performed worse in the last 7 days than XRP. I'll go to the last page. Yeah, okay, they switched around on me again now, but you get the point. Okay, so this one's done well. I don't know that. I don't know that token. Maybe we all should have bought that one. But realistically speaking, there you go. The Blue Dragon is 98% down. That's a bad investment, right? But where we're looking at the world is there's no need to be fearful right now. And then we come on to the other side, and this is a Black Swan event. We thought there may be Black Swan events. This is one. No two ways about it. 200 odd missiles being sent into a country by another country has to be a Black Swan event, has to be taken incredibly seriously. I think I read this morning that one person has been injured or perhaps lost their life. I think it was just an injury for now. Awful. One person is one person too many, right? No one will disagree with that. But let's have a look at this from an emotionless point of view again. Let's look at how war affects stock markets, because I've seen so many people saying, oh, but this is going to be different now. The markets are all going to go. Now, this is stock markets as opposed to crypto markets. What you can assume here is that crypto markets will react in a similar way, but in a much more exaggerated way. Going back to that fact I said before, a lot of the people knew there's very much more emotion involved in the crypto markets than there is in the stock market. And because there's so few people, there's a bigger effect on these things. There's much more of an averaging thing. If you're looking at the S&P 500, then there's going to be a more average response because far, far, far more people buy it, sell it, trade it, and therefore far smaller an impact is made when one person runs for the hills, when 10 people run for the hills. So it's a more diluted effect. But let's just take a look at this, because this is something that, I mean, this is a slightly older thing now. It's going back to 2020, but it still gets the point across. This is what's happened in the world, various events. You know, the bombing of Syria, for example, in 2017, the total market effect it had was 1.2% negative impact on the markets. The bottom came after 7 days, and 18 days later, the market had recovered. Okay, let's go a bit bigger than that. We're going back to 1990, the invasion of Kuwait. Remember, the markets were very different back then. In 1990, not everybody invested like they do today. You didn't have access to this at the touch of your phone. There were certain companies that would pay a lot of money to companies like Bloomberg to be given up-to-date information, which was normally about 24 hours old. People didn't invest in the same way. People didn't have the same access to information, so everything was more exaggerated and more delayed. There was a 1 day 1.1% impact, a total drawdown of, let's call it 17%, 16.9. The bottom came 71 days after the invasion of Kuwait. This was the first time round. This was big news in those days, big news. I was only young, but I remember it. And 189 days later, give or take half a year, we were back to recovery. Reagan shooting, tiny effect on the market, 1 day to the bottom, 2 days to recovery. Let's go down to other things. The Kennedy assassination, similar, very little impact. Pearl Harbor is the biggest one. So Pearl Harbor was a 19.8% hit on the stock markets, which was huge. Let's be honest. Pearl Harbor was a huge, huge event. 143 days to hit the bottom, 307 days to recovery. This was the event that dragged the USA into the Second World War, possibly the biggest black swan event in the history of the world, or at least in the modern world. 143 days to the bottom, 307 days to recovery. There is no reason that this will be anything like as dramatic as that, anything like as impactful as that. I've been reading some reports this morning. I'm not an expert on warfare, or I'm not an expert on global politics or anything like that. Very, very few of the missiles caused the damage that they could have caused. Iran has apparently come out and said, as far as it's concerned, that was retaliation, and the matter is done. Whether that's true or not, I don't know. This is all breaking news that you see. There's sometimes cases where you read something and you think looks legitimate and it's not. But the missiles Iran sent were as a response to something that Israel had done in the first place. You look at this from a step back, and like I say, I don't want to sound emotionless when it comes to human life, human suffering, but in the same respect, we're talking about the impact on the stock markets now. If you look at it from that point of view, there is a very good chance that if those missiles landing in Israel were not as impactful as they might have been, Israel will have to respond, but may well respond with some very strategic one-off attacks back to, both sides flexing their muscles and saying, look, we're not going to take any bullshit off each other. Both sides showing what they've got in their arsenal. There's going to be some support from both sides in the world. I mean, okay, you can take a look at that. I know if it were me personally, I can look at each side's allies and know which team I'd rather be on. I don't want to be involved, and I hope nothing ever happens to this. I pray that nothing else comes of this and that everything ends peacefully. But realistically speaking, it's a very, very one-sided argument here. And I can't see either side wanting this to escalate, to be perfectly honest with you. I suspect what will happen is this may actually end up being closer to something that finishes the conflict as opposed to escalating the conflict. I hope that's the case. Again, I'm not in the military. I don't have any special knowledge on this sort of subject. It's just, looking at how things have happened in the past, looking at what the experts say. Um, but I suspect this may de escalate the situation more than it escalates the situation. I hope so. I hope so. I'm not going to go into any more detail on that. But what this video was more about was to say, well, from an investment point of view and purely an investment point of view, we need to take a step back, withdraw emotions, and look at this just with very, very bulletproof tinted goggles and say, I'm not going to let any of this affect my mental state. I'm not going to affect my emotions when it comes to the decision making process. Is today a better deal to buy into the markets than yesterday? Yes. Is today a worse time to sell my holdings than yesterday? Yes. Therefore, what should I do? Well, the answer is definitely don't sell unless you absolutely have to, and definitely buy some more at an affordable rate that is sensible for you to do. Don't go and overcommit yourselves. Don't go and sell, you know, a kidney to get yourself into the market. That's not what this is about. What we're talking about is if you have the ability to sensibly dollar cost average into this market, now's a better day to do it than yesterday. If you can control your emotions and keep your eye on the prize, nothing really has happened that wasn't expected. Every technical analysis guy I follow predicted a correction in this market. If we go back and look at the Bitcoin markets of the past, so let's go back to the last 5 years. Take this off here. This was the last big bull market. It definitely wasn't just a straight continuous line upwards. We go up, we come down, we go up, we come down, we go up, we come down. That one, that's a big correction, 57 down to 45, a huge correction. Up again, up, down. This is how bull markets work. They're not just straight continuous lines. This is only going to get more exaggerated the more the big banks, the big institutions get involved because they know that people with weak hands are easy to shake out. They know that they can take our coins from us for cheaper if they create fear, uncertainty, and doubt in the markets. And this is what they do professionally. I've said to some people, if you are trading this market with leverage right now, you are either incredibly good or incredibly stupid. You can't be anything but one of those two things. It's a terrible time to be trading with leverage unless you are 100% certain you know what you're doing. I don't trade this market with leverage. I don't trade it at all, to be honest with you. I sit back, I buy when it's a good time to buy, and I will sell at some point in the future when I think it's a good time to sell. Realistically speaking, only the very, very best should be trying to trade this market with leverage right now. You get wiped out. I think something like $1 billion was wiped out, $1.2 billion in 24 hours. That's a phenomenal number. And most of those people will be people that thought they knew what they were doing, that didn't expect this Black Swan event. I hope it's not damaged people too badly. But from our side of things, stay emotionless, keep your eye on the prize, think about this as a long-term investment now. Don't put anything in you might need back in the next 2 months, 3 months, 6 months. Keep yourself in a position where you can afford to put in what you put in, and anything above that, hey, take it on the chin. You'll catch it next time. Stay emotionless. You'll ride this one through. After a while, many of you listening will agree with me, it becomes old hat. I couldn't give a monkeys that the market's gone down over this last 24 hours. I bought some more today when I didn't expect to be buying today. That's all that's happened. That's all that's changed for me is I bought some more today that I didn't think I'd buy. Guys, that's all I really wanted to say. It's just about making sure everyone takes a step back and thinks about this logically. Look at all these other times historically where you'd have panicked and sold. People would have panicked and sold, okay, this one would have been a good time to sell. I think I was about there. 63,000 was when I sold my Bitcoin last time. I didn't have very much. I didn't have very much. It was only a toe in the water when I began buying. I think I bought in somewhere around here. It's about 3,000 something I bought in, and I sold it up here. I did very well on the trade, but I didn't put an awful lot in. But realistically speaking, it's about that. Look at all these step backs on the way to going forwards. don't worry about it. As long as you can afford to keep your investments in until they're worth more money, everything works out well. Guys, I hope you enjoyed that. I hope that brought a little bit of value to you. As ever, if you do like what I have to say, please do like and subscribe to my channel. Please do share it. Share it on social media as well. I'd be really grateful for that. In the meantime, I'm going to leave that with you. We're 20 minutes now, so I'll try and keep things short and sweet if I can. I fail sometimes as well, so apologies for that. But yes, if you have any questions, please drop them in the comments box. But please do like and subscribe to the channel. That's really, really appreciated. I'm very grateful. Have a great day. We'll speak again soon. Thanks again.